IVV ETF, Unveiling the Core of American Equity Investing. The iShares Core SP 500 ETF, fondly known by its ticker symbol IVV, has earned its place as a titan in the financial arena. But for uninitiated investors, navigating the world of ETFs can be daunting. What exactly is IVV, and how can it fit into your investment strategy? This comprehensive Q&A delves deep into the heart of IVV, addressing your burning questions and equipping you with the knowledge to make informed decisions. So, buckle up and prepare to unlock the secrets of this widely sought-after ETF. What is the iShares Core SP 500 ETF, IVV? IVV is an exchange-traded fund, ETF, offered by BlackRock's iShares. It passively tracks the performance of the SP 500 index, a benchmark comprising the 500 largest publicly traded companies in the United States. Essentially, buying shares of IVV grants you instant exposure to a diversified basket of leading American corporations, effectively mirroring the performance of the entire U.S. stock market's large-cap segment. Why is IVV such a popular investment choice? Several factors contribute to IVV's widespread appeal. Diversification. Owning one IVV share grants you instant ownership in 500 companies, significantly reducing your portfolio risk compared to holding individual stocks. Low expense ratio. IVV boasts an incredibly low expense ratio of 0.03%, meaning only 3 cents in fees are deducted for every $100 invested annually. This translates to substantial cost savings over actively managed funds. Liquidity. IVV enjoys exceptional liquidity, allowing for easy buying and selling on major exchanges throughout the trading day. Transparency. Track the performance of IVV with ease, as its holdings and index composition are readily available on iShares' website and other financial platforms. Long-term track record. Since its inception in 2003, IVV has consistently delivered returns closely mirroring the SP 500's performance, demonstrating its effectiveness in capturing the growth of the U.S. stock market. Is IVV suitable for all investors? While IVV offers an attractive investment option for many, it's crucial to consider your individual risk tolerance and investment goals. Risk profile. IVV tracks the overall U.S. stock market, inheriting its inherent volatility. While the long-term trend may be upward, expect periods of market fluctuations and potential short-term losses. If you have a low risk tolerance, IVV might not be the best fit. Investment goals. If seeking aggressive growth or high returns in the short term, IVV might not be the optimal choice. It excels at providing broad market exposure and long-term wealth accumulation. How does IVV compare to other SP 500 ETFs? Several SP 500 ETFs exist, each with slight variations in features and costs. When comparing IVV with its peers, consider the following. Expense ratio. As mentioned earlier, IVV's 0.03% expense ratio is exceptionally competitive. Some rival ETFs might charge slightly less, but the difference is often negligible. Tracking method. Most SP 500 ETFs, including IVV, employ physical replication, meaning they hold the underlying stocks in proportion to their weight in the index. Some ETFs might use sampling or optimization techniques, potentially impacting tracking accuracy. Additional features. Certain ETFs offer additional features like dividend reinvestment or exposure to specific sectors within the S&P 500. Choose an ETF that aligns with your specific needs. How can I incorporate IVV into my investment strategy? IVV's versatility allows for various integration methods. Core holding. For a long-term investment portfolio, IVV can serve as a foundational asset, providing broad market exposure and diversification. Buy and hold. IVV's long-term track record and low costs make it ideal for a buy-and-hold approach, allowing you to ride out market fluctuations and focus on long-term wealth accumulation. Dollar cost averaging. To mitigate market volatility, invest in IVV through regular, fixed-amount purchases regardless of the current price. This strategy averages out your cost per share over time. Sector rotation. IVV can serve as a base holding while you engage in strategic sector rotation through additional investments or actively managed funds. What are some potential drawbacks of investing in IVV? Potential drawbacks of investing in IVV. Limited upside potential. While IVV tracks the S&P 500's average performance, it won't outperform the index, meaning you miss out on the potential for higher returns achieved by actively selecting individual stocks or investing in specialized funds. Exposure to market downturns. As mentioned before, IVV mirrors the overall market, inherently inheriting its volatility. During periods of significant market dips, your investment value will decline alongside the S&P 500. Concentration in large-cap stocks. IVV focuses solely on large-cap companies, potentially missing out on the growth potential of smaller firms. Investors seeking exposure to smaller company stocks or specific sectors within the market might need additional investments beyond IVV. Lack of income. IVV's dividend yield is typically around 1.5%, lower than what some individual dividend-paying stocks offer. If income generation is a primary investment objective, IVV might not be the best choice. Tracking error. Although minimal, IVV might not perfectly track the S&P 500 due to factors like expense ratios and transaction costs. This slight deviation can impact your returns over the long term. Beyond the drawbacks. It's important to remember that these drawbacks are inherent to the nature of an ETF that passively tracks a broad market index. For many investors, the benefits of diversification, cost-effectiveness, and convenience outweigh these potential negatives. Further considerations. Tax implications. Consult a tax advisor for specific guidance on the tax implications of investing in IVV based on your individual circumstances. Alternative investment options. Explore other asset classes like bonds, commodities, or real estate to create a well-rounded and diversified portfolio. Regular portfolio review. Periodically review your portfolio, including your IVV holdings, to ensure it continues to align with your evolving investment goals and risk tolerance. The final verdict. IVV remains a powerful tool for investors seeking low-cost, diversified exposure to the U.S. large-cap market. Its long-term track record, transparency, and liquidity make it a highly attractive option for various investment strategies. However, it's crucial to understand its limitations and assess your individual financial goals and risk tolerance before incorporating IVV into your portfolio. By carefully considering both the benefits and drawbacks, you can make informed decisions and leverage IVV's potential to help you achieve your financial aspirations.